Welcome back. Up next, Forum Daily's Market Update with Catherine Murray. Catherine is the host of The Buck Stops Here, and she joins us now. All yours, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market update. I am Catherine Murray. Well, markets this week have seen some major swings, a lot of volatility in the marketplace. The moves have been to the upside as well as to the downside. Currently, we are seeing U.S. markets trade lower to the tune of about 0.5 to 1.2%. Unable to continue that move higher, which we saw yesterday, a huge gain in the Dow Jones Industrial Average. Now, of course, the moves this week have been driven by the uncertainty surrounding Russia and Ukraine, and of course, concerns about the U.S. Fed tightening cycle. On the positive side, that we did actually learn from U.S. Fed Chair Jerome Powell to expect a 25 basis points hike in March. That actually may have eased some investor concerns who had originally been pricing in a 50 basis point increase. The bullish thesis, though, does surround oversold conditions, so a little bit of a technical aspect there, and that's perhaps one reason why we saw the market move higher yesterday, in addition to perhaps the Fed moving to the tune of 25 basis points, not 50. We don't know that yet, but that's the take right now. And there is a bit of a buy the dip mentality. And Tina, there is no alternative. Also, of course, on the positive side, we do have improving COVID trends, and U.S. consumers have $2.5 trillion in pent-up savings. So that is a lot of potential pent-up demand that could help boost the overall economy. Now, of course, the main concern when we think about the market and the market moves is what's going on with the inflation front, specifically oil. We saw a huge spike in the price of oil, WTI hitting $116. That's the highest we've seen oil since September of 2008. We've actually got some analysts out there saying that we could see $170 to $180. Now, of course, the biggest concern is that would hit the consumer and therefore impact demand here at home, but also, of course, around the globe. Also, we have concerns surrounding the supply chain disruption on the fertilizer front, stemming out of Ukraine and Russia, and that could increase the cost to farmers and therefore food inflation once again. So inflation is still the biggest focus area. Second probably would be the U.S. Federal Reserve. Today, we are seeing oil pull back a little bit. That's after Iran, after reports that we could see an Iran nuclear deal, which could be signed, allowing for Iran to be able to export about 2 million barrels per day in about 2 months' time. So alleviating some of the pressure there. In terms of the market moves today, in the United States, consumer staples, utilities, REITs, healthcare are outperforming the broader markets. In terms of the TSX, of course, in Canada, the biggest news here really was what we heard from the Bank of Canada yesterday. They did raise rates by 25 basis points and reiterated that they are on track to continue to increase rates. Quantitative tightening, not easing anymore. Tightening was discussed, but we don't know the timing in terms of when they'll start to pull back those bond purchases. And it was indicated, of course, that it will be based on the economy. I think we'll probably hear from a number of various central bankers around the world that the timing of quantitative tightening will depend on what is going on in Russia and Ukraine. Away from that, on the TSX front, we did see TD wrapping up a strong quarter for the Canadian banks. So some strong results there, but the stock is trading lower. We are seeing a little bit of pressure on the financials today. And away from that, the TSX is trading mildly higher, but that does follow some nice strength yesterday, up by 1.2%. In terms of some other stocks that we're watching pretty closely, CNQ in the energy patch, they did come in with better than expected earnings, setting that stock up by about 4%. Tricon, which invests in U.S. real estate, but it's a Canadian company and Canadian listed, better than expected results, setting that stock up by over 2%. And Constellation Software, also some good results there. That stock moving higher to the tune of 1.2%. Importantly as well, we always keep our eyes on the Canadian housing market. It affects so many of us. We did see that prices continue to move higher in the two big markets, that of course Vancouver and Toronto, moving up 20% year over year in Vancouver and 28% in Canada. In terms of the sanctions, just to kind of wrap it here, obviously expect trade disruption, higher prices, inflation on the food front, as well as your gas prices. Interestingly, though, the pressure continues. MSCI did remove Russian stocks from the emerging market index, saying that they are uninvestable. And we also heard from Fitch and Moody's slashing Russia's debt rating 6 notches to junk status. We will see how this all plays out. But for now, we are definitely seeing supply disruptions and higher prices. Nima, I'll leave it there. Back to you.
Wow, that's quite the cut to Russia's credit rating, Catherine. Thanks for that. For more analysis and news on the markets, be sure to tune in to Catherine Murray on The Buck Stops Here.